So if you're sitting here owning a piece of land and you're like, wow, this sounds interesting, but why do I need these guys? Well, maybe you don't. You can probably get it done. But the question is, A, there's getting it done, and B, there's getting it done profitably, right? You'd be really surprised when you lay down your initial numbers and you don't know what to expect. And then you turn around 5 years later, and you're like, oh my gosh, this is what I actually spent, like what my basis actually is on this project. That might be a stark difference, So talk a little bit about the landowner and kind of what they experience. So, what risks are they exposed to? What are they expected to deliver?
So what we do is we do what we call cursory review. That doesn't cost any money. It's just a couple of hours of our team's time to look at the project, to see what else we've done in the area, if we work with this municipality, what the zoning is. And then I typically like doing it myself, but to put together what I call back of the napkin pro forma, just to see if it even makes sense on the surface. If the deal makes sense on the surface, then we present it to the potential partner, to the property owner, and we outline how this deal could work, what the general size of the deal is. We ballpark the value of the land. Most times they have the value that they keep in mind. We say before we sign anything, we'll get an appraisal. We'll know exactly what your property's worth, so that there are no surprises and so that there are no arguments about it. But then, so I call this a pre-feasibility process. That doesn't cost, it costs our time, but it doesn't cost actual cash.
You're listening to the Real Estate Runway Podcast, powered by Quattro Capital, where we're all about alternative business and investment strategies to help you amplify life and maximize wealth. Here's your host, Chad, the investment maverick.
All right. Real Estate Runway family, welcome to another episode of the Real Estate Runway Podcast. I have to apologize today. I'm a little hoarse this morning, so my voice is a little raspier and deeper than usual, but we are going to get through it, family. Now, today we have Eugene Gershman on the call with GIS Companies. This is a really unique developer with a really unique strategy I'm excited to share with you guys. But before we get into it, folks, as per usual, we do this show for free. This is all about adding value to you. So if you get any value out of the show, like it, subscribe it, swipe it, whatever it is you're watching it on, just interact with it so the algorithm knows, hey, I enjoyed this episode. And if you'd be so kind and so dear as to share it with someone else who might need to hear the messages we're talking about here. That's how this word gets out. That's how you pay it forward to people just like you. So without further ado, welcome to the show, Eugene. Great to have you on the Real Estate Runway Podcast. How are you today?
I am doing great. Super excited to be here. Thanks for having me, Chad.
Absolutely. I'm really digging the background there too. So if you guys are watching him there, he's got a pretty slick purple background. It almost looks like the Northern Lights if they're purple. But anyway, by the way, side note, I live in Tennessee. Did you know we got to see the Northern Lights a few weeks ago? That was the craziest thing I've ever seen in my life. It dipped down so far. It was weird.
Right. Yeah. People were posting Northern Lights around here, and I walked outside, looked at it, and I'm like, I can't see anything. So but I was supposed to take a picture with an iPhone. Yeah.
Well, we had some kind of a gentle purple glow, but anyway, too many trees. So I digress. Before we get into kind of what it is you're doing, I love to give people an insight into who you are. What is your background? How did you get into this space? Where did you come from? And so anything that's relevant, if you'd walk us through your story a little bit and just help us understand who Eugene Gershman is and what led you to build what you've built today.
Absolutely. I was born into a construction company. My father started this business 30 some years ago, 35 years. I can't even remember. So growing up, I've always been around construction. My grandfather was a builder. My father was a contractor. And growing up, I didn't want to be a builder. I said, I'm just going to study business. And I got my degree in economics. Went to work for an investment company and said, I'll be on my own. A few years later, fast forward about, 2 or 3 years, I got bored doing that job. I went back and decided to get my MBA. Figured I need to grow up and get a master's degree in business. My last year of MBA, my father calls me. He says, hey, I've got this deal. We have an opportunity to invest into a real estate project, not just be a builder, and expand our construction company. Would you take a look at it, since you're studying all this fancy business stuff and there's a lot of documents and there's this complicated financial model that I need to review. I'm like, sure, send it to me. So I reviewed it, called them back, said, yeah, looks good, looks promising. I mean, I don't know much about it, but the model is fancy. It was probably one of the most complicated Excel models I've seen at the time. And then he says, well, great. I'm flying to this meeting with a bunch of people. Do you mind joining me? Since you're familiar with the document, maybe you could help me in the conversation. So I went, and the project was, by the way, all the way in Hungary, which was new country to all of us. We didn't speak the language. I've never been to Budapest before. But I said, sure, why not? Let's go check it out. And so we went, had a meeting, and it was an interesting meeting with folks from different backgrounds. There's like 3 or 4 different languages spoken. So I came back, and a few weeks later, there was another meeting that I went to, and a few more meetings, phone calls. It was before Zoom. He calls me and says, well, I guess we're doing this. We need to set up an office there. He goes, I wish I could have somebody I could trust. I'm like, okay.
And he just looks at you.
I guess I could do it. So that's how I joined family business. And then the rest is history, as they say. That project actually never happened. We lived in Hungary about just under a year. There was issues with permitting and just a lot of government bureaucracy. We came back to Seattle, started doing a few projects, smaller projects, development. Took one project through permitting, then the markets crashed back in 2008. So 8, 9, and 10 were slow. We've done a few spec homes. We've done we set up our own construction company. So my sister joined the business too when she got done with college, and we started doing residential construction, spec homes around here. Spec homes around here are in $2-3 million range. So, but that was how we got started. Then moved on to townhomes. From there, moved on to bigger multifamily apartment condos. Our biggest project completed was about 150 unit apartment building. Right now, we have a 300 unit apartment building in the pipeline. And so, yeah, it's been busy. It's been a lot of ups and downs, but here I am.
Yeah, and so most of those you've probably built and sold. The apartment buildings, are you building those for family, family holding, or are those contract builds for you?
They're development projects that we participated in, and every time we develop a new project, we look at it from the lens that we're going to keep it long term. The previous projects, we've let them go and moved on to other things, but every time, like this 300 unit building that we're developing right now, getting ready to start construction, again, we look at it as if we are going to hold it long term, indefinitely. But then, we'll see how the market is, see what opportunities present themselves.
So interesting off the wall question for you, Eugene. I just returned like last week from building houses down in Guatemala. And as you know, it's a different world down in a lot of these Latin American countries. You can't exactly guarantee clean title. And so it kind of makes you thankful for the I don't know what's the right term, the hullabaloo you have to go through here to buy a property, going through title and all that kind of stuff. Just having had experience in Budapest, which is a great city, by the way. I've spent a lot of time there in a former life, a wonderful part of the world. What were some of the challenges that you found to be really, I guess, what killed the deal, over there, but that maybe you wouldn't have experienced doing real estate in the States? It's always fun to see, like, hey, how does everyone else live with, real estate development outside of our country, where there's some things that are good and some things that are bad, but they have different problems. So I'd love to just kind of maybe walk that with you for a second, if you wouldn't mind. It's a little sidestep.
Absolutely. And I'll have to trigger my memory. It's been 20 years ago. But
oh gosh, sorry for that.
Generally, government bureaucracy is government bureaucracy, and it's the same, but it's different.
Yeah.
Different types of issues. Back there in the old world, it's different levels of corruption, different levels of trying to figure out where to grease the wheels, if you will, and push things forward. That particular project that had it was a historical site. It had federal government involved and local city government involved, and so it was difficult to maneuver between them. But generally speaking, it's the same kinds of issues where you not only need to design a project that makes sense, that's easy for contractors to understand, but you also need to look at the market and what the market is going to accept. And so not only that market is different, but also the approach to getting things done is different. So it's that part was fairly interesting. We had to, of course, I was at the time was more on the construction side of things. We were members of the development team, but my personal goal was to build a construction entity. So it was interesting building a team in the culture where you don't speak the language, you don't really know anybody, and trying to put it all together.
Yeah, I can imagine that's a challenge anywhere you are in the world.
Exactly. Well, and I think I think back then is when I coined my phrase that everybody around me hates when I say that, but I always say it's not rocket science. We'll figure it out. And they're like, "You say that all the time. It's freaking complicated."
I love that. And a running joke on my team, there was a time in a prior life where I literally built rockets for a living. I was an engineer, not a rocket scientist, but the running joke is it's not rocket scientist. You should know. To which, I laugh sheepishly a little bit, but anyway, neither here nor there. So take us into what you're doing now, because you've got a really interesting model. And this is what I'm excited to bring to the listeners today, where Quattro typically, when we do our projects with investors, when we take outside capital, it is typically a syndication model where it's like, okay, we need $1 million. 10 of you come in for 100,000, and you each have a 10% share of the limited partnership of that project and share all the profits, right? So it's a little different where you bring cash and you contribute cash as equity, and you're part of a larger project. You've done something kind of similar in the development space. So tell us about it. Tell us why it's unique, and let's kind of get into that road a little bit.
Right. So what we do is basically the same thing, except we add on like 5 different layers to it. Because
it's the same, but it's different and harder. Here we go.
Exactly. So we also need to get equity into the deals, and we would syndicate with the passive investors who would come in and become our limited partners. But then instead of buying the land and going through the process of entitlements and designs and permits and then construction, we also tell property owners to contribute their land into the development. And we developed this model a few years ago. Actually, it started back in Budapest. That was how we joined the partnership, not really thinking that would be our business model. And then fast forward several years later, we said that's what we're going to be doing. Rather than buying properties and taking them full cycle, we decided to partner with property owners. And right now, market is such that raw land doesn't sell. Developers don't buy land as much because it's hard to get projects to pencil. So what we're telling people is, look, it is difficult to sell. You can't get top dollar for it. Let's contribute the land into this joint venture. We will help you put the team together. We will help you arrange financing. And then we will put together the construction team. We'll get it built. And then we'll see. We could either sell it. If you really want to exit, we could sell it. Maybe we could figure out a way to refinance and cash you out if that's what you want to do. But let us be the developer for you, and let's get this project done. And we're mostly focusing on single family or multifamily residential deals. We haven't done offices or retail or anything like that. We do have one hospitality project in the pipeline, but it turned out to a pretty good model. And a lot of times when we talk to property owners, they one of the first questions they ask us is, why do we need you? I already own the land. why don't I just hire an architect and then hire a contractor and get it built myself? And we say,
If only
absolutely,
it
you
were
could
that
do
simple.
that. Exactly. If it was that simple, fine. And a lot of people do, and some people get lucky, some people fail miserably. But we say, look, that's what we do every day. We know what to expect. And today is perfect time to get started because it's going to take you a couple of years to get a permit. Reality of our area is it's 18 to 24 months to get a permit. It sucks, but that's what it takes. Then it's going to take you another 2 years to build a building. Unless it's a single family home, we can obviously build it faster, probably get it permitted faster. But a commercial multifamily building, it's going to take you at least 4 years just to have a building done.
And then lease
you
up
need to stabilize
for probably
it,
9 months.
lease up, exactly. So here's a 5-year time horizon from zero to having an occupied building. Then you can market it. But if you look at your returns and at your equity performance, we're looking at about doubling your investment. So yes, you could sell now. You could probably you would probably have to discount, or let's contribute into the project, get it built. 5 years later, you exit and you double your money.
Yeah, that makes a lot of sense. And I mean, just someone who's done a lot of redevelopment, not even ground up development, folks, there's a lot that goes into it. So if you're sitting here owning a piece of land and you're like, wow, this sounds interesting, but why do I need these guys? Well, maybe you don't. You can probably get it done. But the question is, A, there's getting it done. And B, there's getting it done profitably, right? You'd be really surprised when you lay down your initial numbers and you don't know what to expect. And then you turn around 5 years later, and you're like, oh my gosh, this is what I actually spent, like what my basis actually is on this project. That might be a stark difference, So, talk a little bit about the landowner and kind of what they experience. So, what risks are they exposed to? What are they expected to deliver? Are they expected to have any sort of control or voting rights or anything like that? Like, what does the structure look like for the landowner? I think it's pretty self-explanatory what the investor probably feels, but talk about the landowner's experience a little bit.
So we're super flexible on how we can structure deals, and different landowners have different expectations or different desires. We've heard people before who come in and say, I really like to learn development process. I want to be actively involved. I have passion for this particular piece of land because it's been in my family, or I grew up in this neighborhood. I want to make sure this is done right. I want to make sure it's designed right. I want to make sure you don't pick stupid colors. You don't pick stupid materials. I want to be involved. And we're like,
sure,
please, by all means, be involved. Participate in every design meeting. Participate in every city meeting, and be as involved as you want to be. Some say, here's a piece of land. Here's our contribution. Go for it. Let's meet once a month, once a quarter. Send us the reports, and that's all we need to know. So we're super easy. Typically, the way we structure legally, on the legal side, we structure deals is we become a co-GP, so co-general partner with the property owner, and then additional investments that we bring in, we bring it as LP equity, and then sometimes we would involve institutional equity as either another tier of LP or mezzanine, or there's pref, there's all these different structures. But so on the legal side, but generally speaking, if somebody came in, contributed the property and said, we don't want to deal with it, we just want to be a limited partner, just pay us our preferred interest, and then let's figure out the waterfall, we would be open to that as well.
So before you kind of, get married and create a joint venture on a project, what level of diligence happens on the project? Because I mean, there's also the very real scenario like you experienced in Budapest, where you go in with good intentions, you get into diligence, you get into, all the entitlements, things of that sort, and it just doesn't work, right? So in the event a project just has to be put to bed, how far into the partnerships are you? Who bears those costs? Which I'm sure is also negotiable, but just talk a little bit about how that, how you see that working, because they don't all come to fruition, right? When you get under the
Absolutely.
hood.
Yeah, and it's a perfect question because that question comes up all the time, especially when we first start talking to people. But generally, what we do is we do what we call cursory review. That doesn't cost any money. It's just a couple of hours of our team's time to look at the project, see what else we've done in the area, if we work with this municipality, what the zoning is. And then I put, typically like doing it myself, but to put together what I call back of the napkin pro forma, just to see if it even makes sense on the surface. If the deal makes sense on the surface, then we present it to the potential partner, to the property owner, and we outline how this deal could work, what the general size of the deal is. We ballpark the value of the land. Most times they have the value that they keep in mind. Obviously, before we sign anything, we'll get an appraisal. We'll know exactly what your property's worth, so that there are no surprises and so that there are no arguments about it. But then, so I call this a pre-feasibility process. That doesn't cost, well, I mean, it costs our time, but it doesn't cost actual cash. Then we go into a formal feasibility process. And typically at that stage, we ask the property owner to finance that stage. Depending on the size of the deal, it could be, from $5,000 to $25,000 to, sometimes if it's a large project, to maybe $50,000. But that's when we actually need to involve consultants. That's when we need to spend serious times. We would meet up with an architect and sketch out what could be done. We would dive deep into zoning. We would engage a surveyor, get a boundary topographic survey of the property. We would engage a geotech engineer to test the soils, and we would schedule a pre-application meeting with the municipality to discuss what we're proposing. And so that could take a couple months, and that's an actual serious feasibility study to determine whether this even makes sense or not. Then the next stage after that, if everything pencils out and everything works, then we need to figure out, how are we going to finance this? If there's no current debt on the property, the simplest way is to take a simple land loan, usually 50% loan to value of current land. We could pull that out. Most banks would finance that. Most private lenders would finance that. So that typically funds the development process. During the development process, so we engage the architects, we engage engineers, we start working with the city. At that point, when we take out the loan, we already formed the partnership, and the property is contributed into a newly created special purpose LLC entity. Then we start fundraising for the actual construction. Unless the property owner wants to contribute cash, in some cases we invest cash ourselves, depending on the deal. Most commonly, we syndicate it, just like what you do, pitch it to passive investors to invest into this project. And usually their money comes in right before we're ready to take out the construction loan. So we don't like bringing in LP equity for the development phase. Some people do that. But most commonly, we would prefer offering LP investments right before we start construction, right before we're ready to take out the construction loan. So that's typical process, step by step.
Yeah, that was very helpful. And so, folks, like what I hope you hear today is that this is another method, right, to be a real estate investor. If you're sitting on land, you inherited it, you bought it, maybe you don't know what you're getting into, whatever, or you just want to bring an experienced team alongside of you. There are so many ways in this business to partner and do more together. I mean, personally, I've chosen I'd rather have a smaller piece of a much bigger pie that is much more efficient than try to figure out everything on my own and get my own scars and stripes along the way. So this is yet another way where a win-win strategy is available, where you can contribute equity, you can contribute land, or any combination of, there too. And as complex as these deals are, you hear that, okay, the situation and the deal, it is negotiable based on risk, based on what you want to contribute, in terms of time, talent, and treasures, and everything from there. So Eugene, this has been a great conversation on this strategy. Thank you for sharing it. Let's do a couple of Quattro questions before we conclude the episode and learn a little more about you. What do you think?
Sounds good. Let's do it.
All right. Question 1. What is your superpower? life or business, and how does it serve you well?
I'm definitely pretty good at Excel. So financial modeling, financial engineering, that's my personal specialty. That's what I do. And so whenever a deal comes along, a lot of times we get phone calls from property owners who uh, started going down the road of development, who already engaged all the contractors and engineers and architects, and they applied for permits, and then they get stuck. They don't know how to finance it. So what I do is I break it apart. I mean, I have a team of people that help, but usually the final touches to that Excel model are done with these fingers.
I'm right there with you. It is the wonderful thing about numbers, folks, is numbers are wonderful things. They tell a story, and it is the same story in every language. Numbers do not lie. So anyway, I love that. Let's flip the coin over.
Funny thing, just to add to that point, is with these financial models on commercial development projects, there's so many variables. It sounds simple. Oh, well, there's construction cost, there's lease-up cost. No, there's like 25,000 different variables. And if one of them changes, the entire thing breaks down.
That's right. Yeah, it's all interdependent. And the funny thing is, I mean, look, I'm sure you know this, Eugene, and I've said this on the show. I can make an Excel model say whatever the hell I want it to, right? But the question is, are all the assumptions, do they have proper data behind them? Are they correct? Are they conservative enough to allow for some deviation? And then all of them interrelate to one another, as you said. So if you blow one, you can be in trouble really quickly. So I love that.
That's right.
So let's flip the coin over for a second. Tell me about your biggest failure. Again, could be life or business. And what did you learn from it, most importantly?
That's a tough one. I obviously made a ton of mistakes in my life and my career. Every one of them is a learning opportunity. I think the biggest could be classified as a failure is started a construction company of my own when I really didn't know how to run a construction company. We tried it for several years. We're actually folding it now and decided to continue working with established contractors rather than trying to push it ourselves. But it is much harder than it seems.
Yeah, that makes sense. And I feel the same way. We considered at one point starting a property management company and insourcing all of our operations. And many people have done it and think it's great. But we like to be nimble. We like to jump around and go different places in the country as the market allows. And that is which I'm sure construction is very similar. That is a very overhead and personnel heavy business, heavy on compliance, low margin. I'm like, why in the world would I spend my time on that? It's a thankless job. But anyway,
exactly. It seems like there's a lot of money in construction, but there's really, a lot of contractors work on, 3 to 5% margin.
There's a lot of money in development. That's the correction, right?
Exactly. And, a lot of people underappreciate the risks that contractors take.
Yeah. And it's all on how that contract's written. So I'm right there with you. All right. Time for Shameless Plug. Tell us about what you're working on that you'd like to share with the audience.
So one thing we recently started is a new podcast. So we're promoting that right now. It's called Real Estate Development, Land to Legacy. And I host that. I meet with a lot of interesting guests, folks like yourself, Chad, where we talk about development process, what it takes, how it's done, how do we get buildings designed, how do we get financing together, how long does it take, and the goal is to educate mostly property owners, those beginner developers, on how to get properties developed. And the idea is, if you really like to learn, listen to the podcast and learn as much as you can. And if you really and if you need help, call us and we'll help you out.
Yeah, folks. And as always, if you're driving or listening to this on the go, just scroll down wherever you are listening to this podcast. Real Estate Development, Land to Legacy is the name. I'm sure that's going to be a great place for you to go learn more about how to get your land developed and create that legacy and probably talk a little bit more about what we've talked about today. So with that being said, Eugene, thank you for coming on the show. This has been a very insightful discussion. I love having the development side on the show because it's not something we do. So it's something that, we can ask questions about, but not necessarily add value to. So thank you for coming on, sharing your knowledge and your unique strategy.
Thank you, Chad. Thanks for having me.
All right, everyone. This has been another episode of the Real Estate Runway Podcast. Until next time, over and out. Like, share, subscribe, all the things, pay it forward. See you next time, folks.
We hope this episode was insightful and brought value to your day. If so, please be awesome and leave us a 5-star review. Find out how Team Quattro can help you at thequattroway.com and scroll down for more info. Until next time, this is the Real Estate Runway Podcast.